Dreamers, I'm Zeke and welcome to the Dream Green Show. In this video, we're going to be talking about one of the most anticipated stock splits of all time. Two anticipated stock splits for Q4 that could possibly happen that could change your lives. Now, why are stock split stores? Now, what are stock splits and why are they so important? So a stock split is saying that if you have one share of a company and that company is worth $100 per share, and they're having a 4-to-1 stock split. For every one share that you own that's worth $100, now you're gonna have 4 shares that's worth $100. Not each, but they're each gonna be worth $25. So it's just dividing it by 4. Now you're gonna have 4 shares. It's still gonna have the same value, $100, but each share is gonna be worth $25. Now, other than having one share worth $100, you're gonna have 4 shares that's worth $25 each, but have the same value of $100, which makes it a lot cheaper. So now it's going to be $25 per share, and it's going to make a lot of new retail investors like me and you come in and buy up more shares of these companies because it's more affordable. And not only does that help us buy more shares, but when it comes to the option game, it makes the option games more affordable, because when you're doing options, you multiply it by 100, and if you do 100 shares of $100, that's going to cost a lot of money. 100 shares of $25, it could cost a little less. In fact, it's 4 times less, and you have more people option trading. There's more volume coming in, more people buying up these shares. And historically speaking, when we're looking at stock splits, usually when a company, a good quality company, has a stock split 10-to-1, 4-to-1, 5-to-1, sometimes 50-to-1 stock splits, then they usually outperform the stock market, the S&P 500, by around 6 to 8%. That means if the S&P 500 goes up 10%, the company that had a stock split goes up 16%. If the S&P 500 trade flat the entire year and ends at 0% growth, that means the company that has a stock split usually have a 6 to 8% growth. If the S&P 500 falls 6%, is negative at the end of the year, the company that had a stock split will break even. Usually they outperform the stock market from around 6 to 8% when it comes to a stock split. That's historically speaking. Past performances do not predict future performances. But when you're looking at the data, it helps you make some educated guesses on where these stocks are going to go. Now, it's been a while since we had some good stock splits, and there are some good ones coming up. Now, 2 of the stocks, wait, before we get into it, guys, go ahead and hit that thumbs up button, that notification bell, and subscribe to the channel. And also, if you guys do want to join the Patreon right now, you could join the Lucid Dreamer Raw. I'm going to leave a code down in the pinned comment section for 50% off. You could come in and get access to my 7 Pro Day Traders, 7 Pro Day Traders for just $6 a month. You could come in and get access to my courses, my video courses, me every single time I buy and sell a stock, my 7 Pro Day Traders, all of my modules, my video modules for just $6 a month. If you're gonna come in and take all my stuff for $6 a month, my charts, everything, you're just gonna come in and just use me like that. It's crazy. But the least that you could do, is hit that thumbs up button on this video, or share this video with a friend. That's all I ask, because I put a lot of work inside those videos. I pay my pro day traders a lot of money. So if you guys do want to take advantage of me like that, go ahead and hit that thumbs up button. But you can have that just for $6, which is, I'm gonna leave that code down in the comment section. But guys, some of the last stock splits that we talked about on this channel was O'Reilly and Coke. You guys could go back and watch that video. I will leave like a little pin thing. Hopefully I remember to put it there. I'll leave a little link right there to those videos. But yeah, here goes O'Reilly right here. So O'Reilly had a stock split not too long ago. Let's look at the differences. So O'Reilly was down here. They had that stock split right here, and if price goes up, at one point, they was up 20. Oh my goodness. That was up 21.93%. If we go to the current price, O'Reilly is up 14.72% since their stock split. And then they did have the pullback that we was looking for. I believe they announced they stock split back here somewhere. They did have a good little run up, and they had the pullback right before the stock split. So you got in at a good entry, but they're up 14.72%. Now, the next one that we're going to look at that had a stock split was Coca-Cola, COKE. Now, this is the past ones before I give you guys that's coming up in the future. Now, Coca-Cola, they had that stock split down here. We had the pullback that we was looking for. We do the charts right here. Coca-Cola had that stock split, and right now they're up around 12.35% since their stock split. Now, the company that we're anticipating having a stock split is one of my favorite companies of all time. And that's going to be ticker symbol NFLX, Netflix. Now, Netflix, they had a 400% gain over the last 3 years alone. Now, companies usually have a stock split when they've been performing really good for the last 4 or 5 years, maybe the last 10 years. They have a stock split that make the price a little cheaper. Now, Netflix, they're at $1,219. So a lot of people are anticipating them having a upcoming stock split sometime in Q4 because of their prices at $1,219 per share. Now, Netflix, they're no stranger to having stock splits. They had a 7-to-1 stock split back in 2015, and they had a 2-to-1 stock split way back in 2004. So they have had stock splits before. So with their prices being up in the thousands of dollars per share, we can see them having a stock split, upcoming stock split sometime in Q4. Now, a little known fact, if they do have a stock split, making that stock price lower, they could join the Dow Jones. That'll put them at a market cap at around like $500 billion, which is higher than most of the other companies inside the Dow Jones. So with the lower share price, that would make them finally eligible to join the Dow Jones. Let's put it like this. If you invested $1,000 back in Netflix in 2004 when they had their first stock split, you'll have around $654,000 today just from buying one share of Netflix. Well, just from buying $1,000 worth of Netflix back in 2004. But no one could have predicted that. We were still getting Netflix CDs ordered in the mail. No one could have predicted that at all. But let me show you guys the numbers on Netflix right quick. So we come over to Netflix, type in NFLX, and show you why I think that Netflix is going to have an upcoming stock split sometime pretty soon. They do have an earnings report coming up, but they have been outperforming the stock market for quite some time. And as you guys can see, over the last couple of years, they've been doing really, really good, coming all the way down from around $176 up to $1,220. Now, this is O'Reilly, ticker symbol ORLY. Over the last year, they're up 30%. If we look at the last 10 years, they're up 503%. That means they had a 50% growth every single year for the last 10 years. So they was due for a stock split, and they had a stock split, right? Let's look at Coca-Cola, COKE, ticker symbol COKE, Coca-Cola. And we're going to look at this. Over the last 10 years of Coke, they're up 487%. That means they've been growing 48% every single year for the last 10 years. Now, guys, let me show you something right quick. We're going to look at ticker symbol Netflix, NFLX, right? Over the last year, they're up 67%, right? Over the last 10 years, they're up 1,132% over the last 10 years. That means every single year over the last 10 years, on average, they have grown 113%, right? Yeah, 113% every single year over the last 10 years. Of course, you're going to have your down years and you're going to have your really good years, but on average, they're up 113% every single year. Now, that is the kind of stock split I've been looking for. They're up thousands of percent. So they're probably not going to have a 2-to-1 stock split. They're probably going to have a 10-to-1 stock split, maybe a 20-to-1 stock split. I don't see them having a 21, but they could. They might have a 10-to-1 stock split, bringing their share price all the way down to around $120 per share, which will be pretty good for them. Pretty good for Netflix. So if you own one share of Netflix and they have a 10-to-1 stock split, you're going to have 10 shares, right? Each worth around $120. Now, it doesn't matter when you buy these shares. You could buy them after the stock split. You could buy them right before the stock split. Doesn't matter. No, you still want to get in on Netflix at a good price, because if you own these shares before, do you have to do anything special? No, you don't have to do anything special. Just keep these shares in your account. Your broker is going to do everything for you. If you buy it afterwards, cool. You're just going to be buying it at the stock split price, and you don't have to worry about doing anything extra as well. So it's pretty simple. If Netflix have on average been going up 113% and they have a stock split, Netflix could have a 120, 130% year, which is crazy. And they're already up 67% last year and this year alone, which is crazy, right? So Netflix could be a game changer when it comes to the stock split. Now, the next one that could have a stock split is ticker symbol Meta, META. Now, the reason why we think that Meta could have a stock split is at $705 per share. If we come back over to Seeking Alpha, type in Meta, let's see how they have grown over the last 10 years. Even though they did have a couple of down years, let's look at over the last 10 years, they're up 623%. That's 62% a year. Now, the reason that many investors believe that Meta could have a stock split is because they're the only company inside of the Magnificent Seven. the top 7 of tech stocks that's pretty much been moving the market for the last 4-5 years. They're the only company inside of the Magnificent 7 that have yet to have a stock split. And they're due for a stock split, being up 600% over the last 10 years, growing 62% every single year on average. So just looking at past performances, right, that can help me make an educated guess about future performances. It's not telling you that it's going to make money in the future. It's not telling you that, but just using data. And if I'm a guy that go off of patterns, right, off of patterns about stock splits and companies, how they perform after stock splits. The company that's been going up 50, 30, 40, 50% over the last 10 years per year, right? This past performance do not predict future performances. But hey, man, I'm using these educated guesses. These are 2 stock splits that I can't wait to happen. Now, let me know which one of these 2 is your favorite down in the comment section. Would it be Meta, who's never had a stock split before, which is in the Magnificent 7, could take the technology stock splits through the roof from it being their first stock split? Or would it be Netflix, who's been growing 100% every single year for the last 10 years, which is crazy? Let me know which one is your favorite down in the comment section. Remember, scary money don't make no money. Sometimes you got to take risks. You got to look at patterns and get in, follow your rules, follow your trades, and buy low, sell high. That's all you got to do. But yeah, dreamers, if you guys do want to join the Patreon, that link is going to be down there in the pinned comment section, down in the description. Could click right here if you guys want to join the Patreon. And also, if you do want to get some free stocks, you could click the link for Moomoo. Just from signing up and using that platform, I think you get up to like 20 free shares. Crazy. And you get like up to $1,000 worth of NVIDIA. Crazy. So if you guys do want to take advantage of that, I'm gonna leave a link to Moomoo down in the comment section. That's one of the brokers that I use to buy and sell shares, buy and sell stocks, and some options in there. So if you guys do want to take advantage of that amazing opportunity, I already got Robinhood, I got Webull, I got Moomoo, and all 3 of them, you know, I use all 3 brokers. And the way that I signed in when I first got started, getting those free shares really helped me grow my portfolio. So if you guys do want to check out Moomoo, that link is going to be down in the pinned comment section as well. But other than that, dreamers, I'm Zeke, bringing you the Dream Green Show, and I'm out. Peace.
This video is for educational and entertainment purposes only. It does not constitute financial advice. All investments about risk. Do your own research. It is not licensed financial advisor. Any third party considered involved in an affair use commentary and analysis. Please consult with a licensed financial advisor or professional in your area before making investment decisions.